Singapore's factory activity showed signs of life in July after 5 consecutive months of contraction. However, economists warn that the manufacturing sector is still not out of the woods yet. Brandon Tenoto with more.
In July, there were more orders, exports and factory output. All these lifted manufacturing activity, pushing the Purchasing Managers' Index to 50.2, up from June's 48. The index is a barometer of the manufacturing sector, which accounts for more than 20% of Singapore's economy. A reading above 50% indicates expansion in factory activity, while anything below indicates contraction. The electronics sector saw an improvement as orders and exports dropped at a slower pace. Economists say the figures suggest the sector is recovering from the impact of the COVID-19 pandemic, and they expect that this momentum can be sustained.
And it's also in line with what we are seeing globally, particularly electronics powerhouses like South Korea and Taiwan have also seen their PMI improve in the month of July. And as more economies reopen and there's disruptions on the supply chain ease, we think that demand is picking up globally. So the uptake that we see in the new orders and new exports orders probably means that the sector has really hit the bottom in 2Q, and we will likely see continued expansion in the third quarter and fourth quarter as well.
Still, economists warn that any recovery would be patchy as global challenges like the US-China trade tension still persists.
The external headwinds will be a confluence of factors. We are beginning to see second wave and even third wave in some countries, and henceforth, forcing the government in those countries to reimpose certain forms of lockdown or restrictive measures, and that definitely will affect, external demand, particularly for small open economies such as Singapore.
Singapore's economy slipped into a technical recession, its first since 2009, after it contracted 41.2% from the previous quarter's drop of 3.3%. On year, the economy shrank 12.6% in the second quarter. The official forecast is for a full-year contraction of between 4% and 7%.